Go back to gold. Gold's going to be remonetized, not because the governments want it, but because the public is going to demand it. I mean, that's what's just going to happen. There's just no other way that it can end. We got to go back to real money. And the catalyst will be a currency crisis. And then that's where people are going to go. Because I don't see that the yen or the euro or the Chinese RMB, they shouldn't be the reserve currency either. I mean, no government should have that privilege.
Yeah.
We need real money. We need a monetary system based on money. If we're going to have currencies, they need to be backed by real money. But I think right now, I think it's clear sailing for much, much higher gold prices. Yeah, silver, too, in particular, which is still a fraction of its old high. So silver's a good buy.
Peter Schiff is a prominent figure at Schiff Gold, specializing in selling gold, silver, platinum, and palladium bullion products. In Peter Schiff's view, the inevitable return to gold will be driven by public demand during a currency crisis, not by government choice. He contends that no currency should replace the dollar as the reserve and advocates for a monetary system backed by real money, which he believes should be gold. However, the demand for gold as a reserve asset has significantly grown since the 2008 global financial crisis. The International Monetary Fund reports that global central banks increased the amount of gold in their foreign reserve portfolios by $20 billion during the third quarter of 2022. This was the largest recorded quarterly growth in official gold demand in 55 years. On the flip side, the share of U.S. dollar reserves held by the central banks has fallen significantly by more than 11% over the past 2 decades. Despite the dollar's significant devaluation against currencies like the Deutschmark, yen, and Swiss franc after abandoning the gold standard, Peter Schiff explains that it retained its reserve status due to the petrodollar system. This system caused a surge in oil prices, underscoring the dollar's decreased value. However, this dynamic is changing, as Saudi Arabia has recently announced its willingness to accept payment for oil in various other currencies, particularly strengthening ties with China and joining the BRICS nations. Now controlling nearly half of the world's total oil supply, the BRICS group is gaining increasing global economic power, challenging the dollar's dominance in global oil transactions. From a technician's perspective, Schiff states that the shift to gold as a preferred payment method will happen, driven by sellers wanting to avoid the devaluation of fiat currency, especially in high inflation environments. This change will ensure businesses can maintain their inventory value without financial loss. Now, we present the clips of Peter Schiff's insights from his recent interview with Reinvent Money. Before we continue to delve into this discussion, please subscribe to our channel and activate the bell icon for timely updates.
I don't think there's going to be a reserve currency that will immediately replace the dollar. So I think we go back to gold as the primary reserve for all currencies. Gold was the reserve before the dollar, and it will be the reserve after the dollar. In fact, the only reason the dollar became the reserve currency of the world was because it was not only backed by gold, but convertible on demand into gold. And so that stopped in 1971. And so the world continued to use the dollar as the reserve, even though it no longer had the characteristics that enabled it to be the reserve. We had the Bretton Woods Agreement, and at that time, the dollar was not pegged to gold and was just fiat. It never would have achieved that status. Nobody would have agreed to it. So they agreed to it, and then once they agreed to it, over time, the world got so dependent on it that when we defaulted, they devalued the dollar. I mean, if you go back and look at the exchange rate of the dollar in 1971, when Nixon went off the gold standard, you used to be able to buy 4 Deutschmarks to the dollar. But by the end of that decade, it was down to 1.5. You used to be able to buy 360 yen for $1. At the end of the decade, it was about 150. Swiss francs were less than 25 cents a piece. By the end of the decade, they were 80 cents. Right? So the dollar lost a lot of value, but it didn't lose its reserve status. And one of the reasons was probably the petrodollar, which was the introduction and getting the OPEC countries to price their oil in dollars. Now, they had to price it a lot higher. When we went off the gold standard in 1971, oil was $3 a barrel. But by 1980, it was $30 a barrel because the dollars that we were paying were a lot less valuable than the ones that we paid when gold was $35 an ounce, because by then it was 800. But I think we go back to gold. Gold's going to be remonetized, not because the governments want it, but because the public is going to demand it. I mean, that's what's just going to happen. There's just no other way that it can end. We got to go back to real money. And the catalyst will be a currency crisis. And then that's where people are going to go, because I don't see that the yen or the euro or the Chinese RMB, they shouldn't be the reserve currency either. I mean, no government should have that privilege. We need real money. We need a monetary system based on money. If we're going to have currencies, they need to be backed by real money. Buying gold to store it, you're not going to spend it. You're going to spend your fiat first. Yeah. Let's say your paycheck, you're a typical guy, and your employer is paying you in gold. And so every month, your entire paycheck is given to you in grams of gold. Well, now if you want to pay your rent, you pay it in gold. And your landlord takes gold in exchange. You go to the grocery store. I mean, if we all start using gold, yes, we're going to save what we don't spend. So if I earn, let's say, 1,000 grams of gold and I spend 900, I can save 100 of them at the end of the month, right? I have some savings and I can keep earning. And you could even do this even if your landlord doesn't want to get paid in gold, because you can sell some gold to pay your rent. And just so you can start with gold and then sell off what you need to pay your bills and keep whatever you don't need, right? So you could do that, and then you could use gold, because gold can function as a medium of exchange. And it's actually cheaper to use and a faster payment process than using Visa or MasterCard or some of these other payment rails. But you have the added benefit of money that isn't going to lose value the way fiat can. And I think ultimately what would drive the adoption of a return to the gold through blockchain or crypto, however it happens, it's not going to be the buyers so much as the merchants, the sellers, the people who have goods and services to sell. They're going to want to get paid in something that's not going to lose value. Now, if we start to live in a world where inflation is 10% a month, for example, that it's very hard to operate a business in that world. It's very hard to sell goods and take in dollars when you may not be able to restock your inventory with the dollars you got from selling the stuff that you had. You could end up losing money on every sale. But if I demand payment in gold, that's a whole different story, because now I have gold. And so if the prices of the stuff I need go up, well, the price of gold will go up too. So I'll be able to restock my inventory because of the savings. So ultimately, that's going to happen.
Regarding the escalating interest on the national debt, Peter Schiff expresses concern that it currently exceeds $1 trillion annually and is projected to double by next year. He predicts that this rapid growth will lead to either default or severe inflation, both disastrous for holders of dollars and dollar-denominated bonds. According to the International Monetary Fund, the huge rise in the U.S. national debt poses significant risks to the global economy and threatens to continue fueling high inflation. In March, the Bank of America warned of a possible collapse of the U.S. dollar, with the country's national debt rising by $1 trillion every 100 days. According to Schiff's analysis, the U.S. will print more money rather than default on its debt, leading to severe inflation. He advises buying gold and real assets to protect against this inevitable economic crisis. Let's get back to the interview.
And back then, too, there were still some people that were holding out hope that Congress was going to get its act together and deal with these issues. But of course, that never happened, and it's not going to happen. Unless there's a crisis, we'll never act preemptively to avoid a crisis, because there's just the politics don't make any sense. And so it's not going to happen. But sure, I mean, you look at the interest on the national debt right now, it's over $1 trillion a year. And by the end of next year, it'll be $2 trillion. And so right now it's bigger than national defense as far as what we spend. But by the end of next year, it'll be bigger than either Medicare or Social Security. It'll be the biggest line item in the federal budget. And it's going to keep growing from there exponentially. And, the higher our debt is, we have to borrow the money to pay the interest on the debt. So the more money we have to borrow, if we're paying $2 trillion a year in interest, that $2 trillion needs to be borrowed because we don't have it, on top of the trillions that we have to borrow to fund the operating deficit. So it's just spiraling out of control. And so it has to end in either default or massive inflation. Those are the only two ways that this movie ends. And it's a disaster either way, if you're holding dollars, if you're holding any bonds denominated in dollars. But what it's most likely going to look like on an inflationary default, rather than a legitimate, we can't pay, and so we're not going to do it. Everybody gets paid in money that's not worth very much, is prices go through the roof and the value of currency collapses. Give the ones held by the Federal Reserve, it just means the Fed has no way of taking the inflation back out of the economy. So that's kind of an admission that we're a banana republic and that all the debt was monetized. It's more likely that maybe they would default on the debt held by the Chinese, for example. Say, hey, we're not going to pay China. The minute we default on anybody, of course, it's a whole new ballgame because now treasuries are no longer risk-free. They never really were risk-free, but people just didn't realize that. But the whole bond market implodes. The dollar, I think, goes down even under that scenario. But we're more likely not to default on anybody because the politicians don't want that because it's too embarrassing. It's obvious that they're the source of the problem if they're the defaulter. They'll just inflate. They'll just print money and blame the ensuing inflation on greedy corporations, speculators, foreigners. They'll blame it on gold buyers. They'll blame it on people like me for encouraging people to buy gold or buying gold, because we help drive down the value of the dollar. But it's their policies that drove down the value of the dollar. I'm just advising people to buy gold to protect themselves from an inevitable collapse. What we're doing to protect ourselves is not causing the crisis. It's the crisis that is coming that is causing us to take preemptive actions to preserve our wealth, right? I'm not going to just go like a lamb to the slaughter if I know that that's where we're headed. So I'm going to try to do something. And I do that. I help my clients buy physical gold. I also help them accumulate real assets around the world that I think will survive hyperinflation or very high inflation. Even if we don't get Weimar Germany style, Zimbabwe style hyperinflation, we're still going to get, Argentina's type inflation, which wasn't hyper, but it was pretty damn high.
Over the last few years, the dollar has been losing market share of the world's central bankers' reserve balances. As businesses and individuals seek to protect their wealth, the demand for gold and other real assets will likely intensify, driving a fundamental shift in global financial practices. How will the potential shift towards gold and other tangible assets as preferred reserve options impact the global economy in the coming years? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the next video.